Well, not everything is going pear-shaped despite the problems facing Europe and the United States. Australia's jobs market is proving quite resilient in the face of the global turmoil, with unemployment remaining under 5.5%. Jobs also picked up, but analysts warn that the numbers aren't quite as good as they look. Here's Philip Lasker.
Some of those in Europe who want out would dearly love to have Australia's unemployment rate.
An unemployment rate at 5.2% is still pretty low by historic standards and not that far from full employment.
Unemployment fell for the first time since March, after the jobs market saw more than 20,000 extra jobs. Over half of those jobs were full-time, although not everyone was impressed by the monthly picture.
There is still a very high level of underemployment. You have many part-timers who want more hours of work, and the proportion of those in the economy is still significantly higher than it was before the downturn in 2008.
And others see this result as nothing more than a statistical bounce back.
While we did get a pretty good bounce in employment for the month of September, up around 20,000, it does follow a couple of quite weak months, and overall job creation has been barely 5,000 jobs per month over the each month for this year. So we've definitely seen a softening up in the labour market.
Most of the September jobs growth came from the resource-rich states of Queensland and Western Australia, but longer-term trends show the two-speed economy can't simply be explained by mining versus the rest.
There is a story of significant industry difference. Manufacturing's lost 120,000 jobs over the last couple of years. The only thing that's really creating strong net employment growth is the public sector, through health, community services and public administration, and there's some high-skilled white-collar work in some parts of the private sector.
Nevertheless, there was a generally positive response to the better-than-expected numbers, with the Australian dollar already boosted by the positive global sentiment, getting another kick back above 102 US cents. It surged more than 7 cents in little more than a week. But does this volatility worry the Reserve Bank?
If you actually look at the behaviour of the exchange rate over the last decade or so, the exchange rate has basically done exactly what we've needed it to do for macroeconomic management, to insulate the Australian economy partly from shocks overseas. Recall that when the crisis really hit in September 2008, by October the Australian dollar had fallen quite substantially.
Now the dollar is helping keep a lid on inflation and possibly helping deliver lower interest rates despite today's stronger job numbers.
On its own, today's data would reduce the odds of a November cut, but we're mindful that there's a lot of other factors at play. In particular, the upcoming Q3 CPI report that's due out late this month is pretty critical.
Americana's coming away!
Which probably means a horse race won't be the only closely watched event on Melbourne Cup Day, when the Reserve Bank Board next considers interest rates.